Very good morning, friends. I am Nalnakshi Swami, welcoming to my channel Smart Index Edge. Today I am going to tell you one flip zones intraday strategy. Actually, traders, you might have thought, so how many times you might have thought you have missed the perfect entry, perfect intraday reversal, and thought if only I knew that was the turning point. Like that you might have felt so many times. In this video I am going to reveal a powerful strategy called the flip zone intraday strategy, a simple but yet powerful super strategy. Super effective way to spot exact intraday reversal zones using just price action. No indicators overload, no confusing patterns. Just one clean concept and boom, you catch the move early with precision. I'll walk you through the logic, live chart examples, and everything. You can automate your indicator also on the TradingView. The concept in this is flip zones occur when the previous candle's close is equal to next candle's open. That actually you cannot see very clearly if it is on a regular candlestick bars. If you go for a bar chart, you can see the flip zones, and also flip candles very clearly. These zones act as dynamic intraday support and resistance. When price breaks and retests these levels, they offer high probability trade setups. And so many times, what happens in the market? Market comes, rallies up and forms a zone. Gaps down and forms a zone. You will be in confusion whether to enter the trade, when to enter the trade. Many traders make mistake entering very early. But after a pause, after noticing the zone and the levels, you can enter very precisely in this. This is the chart of Bank Nifty. Bank Nifty on 23rd, I'm showing you these are the flip zones. Here you can see after the gap down, it was a bull candle. It may opened here and made an high and closed here. The next candle was a red candle. You can see over here. This is the close of the candle, and the next one is a bullish candle opening at the close of the red candle. And notice over here the low is higher than the low of the previous red candle, indicating some sort of reversal. But if you enter here thinking that it is a reversal candle, you will be stopped out. So you need, because it is a huge big bull bar, and it is closing at the bottom, indicating, so it is a wide range bar. So when this sort of bar is formed, you need to wait actually to a zone to be created. You can see consequent this candle opening here, and next candle it is a dozy, open is equal to low, and opening at the close of this big candle, and next candle also opening at the close of the candle. With the help of ChatGPT, I've done a indicator to mark the flip zone for turning points, so that it will mark. Not every candle, it has marked the zone. So you need to mark a zone like this and wait for the confirmation. See, this was a liquidity ping pong. After this, the market was the process of accumulation, and you will be in a dilemma, but it is a reversal for the upside. So here, what happened in this zone? Here, this candle pops out of the range, making an higher high, and also this is a flip candle. Opening, opening at the close of the red candle and making a higher high. You can see higher high. Here, this candle was a red candle. The market made a opened here and made an higher high. And this candle is making an higher high coming out of the range. Then you can enter into the market by noticing the flip level. These are the flip level strategy. Then you can see the rally over here. The same chart with the help of call option, because it is a problem for the call option traders for the entry, precise entry. Suppose if they enter early or something in this zone, they will be chopped out. They will not be holding the position because of this liquidity ping pongs. See, you here in the call option, after the fall, the zone has been created and price flipped so many times and creating a zone and also creating a level. A level was created around 93 rupees and it rallied up to, if you would have caught the move exactly around this, keeping this as stop loss, then you would have taken a profit of almost 100%. From 93 to 183 is an 100%. This is how you can notice. See, these are the problems when the market goes sideways. You will be under confusion whether to take the trade or whether sometimes it will also trap also. You can identify the trap also. Next thing, see here, it is an yesterday's chart, Nifty's chart. Yesterday it was very huge, choppy from the morning from 10:30 to 12:30. The market was going sideways. You can see so many flip candles are forming over here. That purple cross thing is the markings for the flip candles. Finally, a zone was created, and here, with the help of RSI, you can notice when you identify this, RSI making a higher low and also price making a higher low, mirror image, and RSI climbing above this its moving average, and you can see a flip candle forming over here, and the rally came to this. This was a difficult thing. So here it was a confirmation because RSI also made a higher low and price also made higher low. So both mirror image, and if you would have entered around this area, you could have caught the rally up to 25,224. That's how it is. In this next slide, what happened on Tuesday. This is the Tuesday picture. A flip zone has been created. Notice how the price increased from the close of this candle. Price opened here and made an high and closed. And the next candle opened here and closed at the top. After this, you are seeing a dozy candle over here, indecision candle over here. So indecision indicates momentum stagnation. Momentum stagnation, this is the level of trap. Actually, because the market has moved higher and people do mistake entering at this level. They will get trapped. This is the flip zone and next candle was a trap. I'll show you how it is a trap with the help of my indicator in the next slide. See, after that it was a history. Market erased all the gains. Market rallied up to 25,317 and came down, plummeted to 25,020, almost down. You must remember you must be remembering the price action on Tuesday. Okay, see, I am showing you, I am combining this with my hourly indicator. For most of the traders, I have given this indicator, TTM squeeze hourly indicator. This I regularly use for my tracking the price action. This is the last hour. You can see over here, correspondingly, this is 11:30 before 12 p.m. The price action is see, you need to see what sort of price action is going on. And here it was, you need to be careful. Hourly closure. Even though then next hour around 12:30, 12:15, what happened? This blue crosses will indicate the high, and the this one the orange color plus will indicate the open. Open and high are together. You might be knowing about the open eye strategy like that. Open eye are together when it is plotted. Notice over here, in the previous hour, open and low are together. Then these things will act as your support. Here it will act as resistance. And this candle is a trap candle from the trap zone. So it started break. This candle broke below the trap zone and made a low here. On an hourly basis, made a low. The price has moved from the high to low. High to low, that means it is a bearish move and a bearish candle has been plotted because the close is below the open. So that is an indication for you to enter into either put option or the culminate the bullish position and close your position. This is an indication. You need to give importance to the hour also, the context, time. Time is very important. That is, with the time, you need to go with that. This is how, if you identify the flip zone and flip candles, if the flip candles are repeating too many times, that means market is undergoing through sideways. So you need to wait for the confirmation of that zone, whether the direction is towards the up or down. This usually happens most of the times in the intraday trading, even for the stocks as well as for the indices. People do mistakes in this. So identifying the flip zone is very, very important. Okay. So strategy logic is identify the flip zone with open is equal to previous close, define the bias. Above flip zone long bias, below flip zone short bias. Entry long bullish candle confirmation after pullback to flip zone. That you can do it. So optional filters for better accuracy is you can confirm the flip zone with volume spike or VWAP alignment. RSI, you can use RSI. I showed you the RSI. You can use TWAP, time-wise weighted average price, or Traders Dynamic Index. Confluence for direction confirmation. So Traders Dynamic Index indicator, I have shown it to you. That is an RSI with Bollinger Band. that indicator in my previous very long back, I have shown it to you. That indicator you can utilize. Anything you can utilize. But for the cross-checking, confirmation, use only in trending or volatile session. Avoid in sideways or low volume zones. Better. See, because in low volume zones, that I explained it to you on the Nifty chart yesterday, it went sideways from morning 10 a.m. to 12. Only it picked up afterwards, right? So flip zone identified at example in Nifty 25,188. Price pulls back, forms bullish candle. It is just an example I am telling. Entry break of the bullish candle high. Below stop loss you need to keep below flip zone. Targets based on the structure are 1 is to 2 risk to reward. Use this strategy for consistent and logical intraday setups. Okay? Okay, friends. Thank you very much. Nalnakshi Swami signing off.